Did you know that if you had invested just $100 in Apple's stock in 1980, it would be worth over $7 million today? Just imagine that. Welcome to the thrilling world of stocks, a world where you can own a piece of a company and share in its successes. Stocks represent ownership in a company and grant you a claim on part of the company's assets and earnings. The more stocks you own, the larger the portion of the profits you get. So you're not just buying a piece of paper or a number on a screen, but a piece of a real business. And the best part? The potential for growth is immense. From tech giants to the local grocery store, every public company around the world can be a part of your portfolio. Stocks can be a ticket to financial freedom, but how do they work? Stay tuned to find out. Imagine a marketplace, but instead of buying fruits or clothes, you're buying pieces of companies. That's essentially what the stock market is. It's a meeting place for buyers and sellers to trade shares, which are simply small pieces of ownership in a company. Now let's break it down a bit. There are two main types of markets where these transactions happen: the primary and the secondary market. The primary market is where companies issue new shares to raise capital. This is typically where initial public offerings, or IPOs, take place. On the other hand, the secondary market is where most of the action happens. It's where investors like you and me trade previously issued shares amongst ourselves. The prices of these shares fluctuate based on supply and demand. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people want to sell a stock than buy it, the price goes down. Now, where do these transactions take place? That's where stock exchanges come in. Think of them as the physical or virtual locations where these trades happen. Some of the most well-known exchanges include the New York Stock Exchange and the NASDAQ. And what about stock indexes? You've probably heard of the Dow Jones, the S&P 500, or the NASDAQ Composite. These are all examples of stock indexes, which are essentially benchmarks that track the performance of a group of stocks. They give us a general idea of how the market or a particular sector is performing. In essence, the stock market is a complex system where shares of publicly traded companies are issued, bought, and sold. But don't let its complexity intimidate you. With a bit of knowledge and understanding, anyone can navigate the stock market and potentially profit from it. So now we know what the stock market is, but how do you make money from it? The golden question: how to turn those stock certificates into cold hard cash? Well, let's dive right in. First and foremost, investors make money from stocks in two primary ways: dividends and capital gains. Dividends are portions of a company's earnings that are paid out to shareholders, typically on a quarterly basis. It's like a thank you note from the company for investing in them. Not all companies pay dividends, but those that do can provide a steady stream of income. On the other hand, capital gains are the profits made when you sell a stock for more than you paid for it. Imagine this: you buy a piece of a company, the company does well, and other investors want a piece of the action. The price of your stock goes up. You sell your stock to the highest bidder. Voila! You've just made a capital gain. However, it's important to remember that the stock market isn't a one-way street. Prices can go down as well as up. This is where understanding market movements and the factors affecting stock prices comes into play. Various elements can influence stock prices: company earnings reports, economic indicators, geopolitical events, and even market sentiment. It's like a giant global game of chess, with millions of players making moves simultaneously. Staying informed and understanding these factors can help you anticipate potential price movements. Timing is everything in the stock market. Knowing when to buy and when to sell can be the difference between making a profit and incurring a loss. It's not about getting rich quick, but about thoughtful and strategic investing. So, what's the secret sauce to making money from stocks? There's no one-size-fits-all answer. It requires diligence, patience, and a good understanding of the stock market dynamics. It's about playing the long game and making informed decisions. Making money from stocks sounds great, right? But how do you get started? Well, stay tuned as we delve into how to kickstart your journey in the stock market in our next segment. Ready to dip your toes in the stock market? Here's how you can get started. First and foremost, you need to understand that investing in stocks is not a gamble. It's a strategic move. It's about researching, understanding, and believing in the companies you choose to invest in. So how do you begin? The first step is research. Start by learning about different companies, their performance over the years, and their future plans. Look at their financial reports and check their earnings, debts, and assets. This will give you a clear picture of their financial health. Understanding the industry in which the company operates is also crucial. Are they in a growing industry, or is their industry facing challenges? Knowing this will help you gauge whether the company is likely to grow in the future. Next, understand the company's business model. How does it make money? Is it sustainable in the long run? A company with a strong business model is likely to be a good investment. Once you have done your research and have a company in mind, it's time to buy stocks. Here's how you do it. You'll need to open a brokerage account, which is like a bank account, but for buying and selling stocks. There are plenty of online platforms where you can do this. After opening an account, you can place an order to buy stocks. You can choose to buy a certain number of shares or invest a specific amount of money. Once your order is executed, you will officially be a shareholder in the company. Remember, investing in stocks is not a one-time deal. It's a continuous journey. You need to keep track of your investments, follow market trends, and make decisions accordingly. Investing in stocks can be rewarding, but it also comes with risks. That's why it's important to diversify your portfolio, which we will discuss in the next scene. But for now, congratulations, you're all set to start your investing journey. But wait, there's more. Ever heard the saying, don't put all your eggs in one basket? It applies to stocks too. Diversification in the world of investing is a risk management strategy that mixes a wide variety of investments within a portfolio. The rationale behind this technique is that a portfolio constructed of different kinds of investments will, on average, yield higher returns and pose a lower risk than any individual investment found within the portfolio. Imagine your portfolio as a pie divided into slices. Each slice represents a different type of investment or asset class. These could include stocks, bonds, real estate, commodities, or even fine art. The idea is to have these various slices react differently to the same economic event. When some are down, others might be up, and vice versa. This balancing act is the essence of diversification. Now let's talk about global investing. While the American stock market might be the most famous, it's far from the only game in town. From the Nikkei in Japan to the FTSE in the UK, there are stock exchanges all around the globe. Investing internationally can offer a world of benefits. For one, it allows you to diversify even further. Different countries have different economic cycles, so when the US market is down, the market in another country might be up. It's also a chance to invest in industries or sectors that may not be well represented in your home market. For example, if you're interested in high-tech electronics, you might want to consider investing in South Korea or Japan. But remember, with great opportunity comes great responsibility. Investing globally comes with its own set of risks, from currency fluctuations to political instability. So it's important to do your homework before you dive in. And that's it, a quick guide to the stock market. Ready to make your millions? So that's the stock market in a nutshell. Exciting, right? We've delved into the thrilling world of stocks, learned how the market works, and uncovered how you can make money from stocks. We've also taken our first steps into stock investing and have begun the journey of diversifying our portfolios. Remember, knowledge is power, and understanding the basics is your ticket to successfully navigate this dynamic marketplace. The road to financial literacy is a lifelong journey, not a sprint. Keep learning, keep investing, and keep diversifying. Don't be afraid to take calculated risks and always stay informed. You're now equipped with the basic tools to start your journey in the stock market. Remember, every successful investor started somewhere, and this is your somewhere. So why wait? Start investing, start trading, and start making your money work for you. Don't forget to like, share, and subscribe for more financial wisdom. And do drop a comment about your stock market experiences. Until next time, happy investing!